a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about silver ETFs. And silver ETFs saw a lot of interest over the past few days. And yesterday, in fact, silver prices surged to their highest levels in 8 years because this retail trading frenzy that moved from GameStop and some other heavily shorted stocks to silver. And traders on Reddit's Wall Street Bets forum, they decided to bet on silver after their very successful short squeeze on some other heavily shorted stocks. So investors and traders, they piled into silver bars and coins online and into physically backed silver ETFs and silver mining stocks. And silver ETFs, the physically backed silver ETFs, in fact, recorded billions in inflows over the past few days because traders wanted ETF providers to buy more physical silver by buying the stocks of silver ETFs. They wanted to push prices of silver up that way. And they were buying physical silver too. So some major online sellers had to, in fact, put restrictions because of the sudden spike in demand. Now the rally is already fizzling today. Silver prices are down. And in fact, GameStop and some other stocks which had that immense run earlier, they are also plunging today. Now, there is some difference between silver and other stocks, big difference. Silver market is much deeper, much larger. And in fact, hedge funds and other major Wall Street institutions, they have long positions on silver. So our silver short squeeze does not make much sense. And also, there is a lot of silver to meet industrial demand. So the type of short squeeze that GameStop and other heavily shorted stock saw, that is not really possible in silver. That is why, as I mentioned, that the rally is already fizzling. Now, there is an investment case for silver, and in fact, silver and other precious metals had done very well last year too. And silver had done much better than gold last year. Silver had surged about 50% last year itself. And that is because of the uncertainty caused by the coronavirus and unprecedented monetary and fiscal stimulus launched by authorities all over the world, and a weaker dollar. And record low interest rates also help precious metals because they boost up the appeal of precious metals because they don't yield any income. So there is an investment case for silver. And silver has many uses in industries, industrial uses from electronics to solar panels. So if the global economy rebounds after widespread rollout of vaccines, then silver prices may continue to go up. So while a short squeeze doesn't look very likely in silver, there is an investment case for silver. And I think the best way of investing in silver is to look at physically backed silver ETFs, or you can also look at silver mining ETFs. So let's take a look at some of those ETFs by going to the code pages on Zacks.com. So the first one we are highlighting is by iShares. It is the largest physically backed silver ETF. So that means that it actually holds bars of silver in London walls. The ticker symbol is SLB. It has over 15 billion in assets and has an expense ratio of 50 basis points. Now, to learn more about this ETF, you can go to the code page on Zacks.com. You can read our research report and articles. You can also go to the external homepage, but there is not much to learn about physically backed silver ETFs because they just hold silver, bars of silver. There is a cheaper physically backed ETF also available. That is by Aberdeen. The ticker symbol is SIVR. It has an expense ratio of just 30 basis points and has 897 million in assets. Now, obviously, if you want to trade, then SLV is a better vehicle for you because of better liquidity, better volumes. But if you want to hold silver in your portfolio over the longer term, then SIVR is a better ETF for you. Now, another way to invest in silver, as I mentioned, is to look at silver mining ETFs. Now, these are kind of leverage plays on the silver metal. The first one that we are highlighting is by Global X, the largest silver mining ETF. The ticker symbol is SIL. It has an expense ratio of 66 basis points and has 1.1 billion in assets. Again, to learn more about this ETF, you can go to the quote page on Zacks.com and you can see that it is plunging today, down 9% after that surge over the past few days. Then you can go to the external homepage, the Global X web page for this ETF. And as you can see, it provides exposure to a broad range of silver mining companies. You can also look at the country breakdown. You will see that it has a lot of international exposure because those mining companies are in Canada, Russia, and other countries. So that is why you will say that Canada has a lot of weight in the portfolio. Companies like Wheaton, Polymetal, Pan American Silver, Hecla Mining. These are the top holdings in the ETF. Then the second mining ETF is by ETF MG. Now, the difference is that it holds smaller silver mining companies. So that is why it is called Junior Silver Miners ETF, those small companies. SILJ is the ticker symbol, has an expense ratio of 69 basis points and 663 million in assets. Again, to learn more about this ETF, please go to the quote page on Zacks.com. From there, the external home page, the ETF MG web page, and you will see that it is first ETF that provides exposure to small cap mining ETFs, silver mining ETFs. So First Majestic, Silver Corp, Hecla Mining, Pan American, those are among the top holdings in this ETF. Now, the third one is by iShares, iShares MSCI Global Silver and Metals Miners ETF, ticker symbol SLVP. This is the cheapest mining ETF, but this is not a pure play silver mining ETF. It holds gold and other metal miners too. Has an expense ratio of 39 basis points and 245 million in assets. And you can go to the quote page on Zacks.com again. And from there, the iShares web page for this ETF. And you can look at the holdings and other details. Pan American, Hecla, Fresnillo, Newmont, which is a gold miner. So you will get a mix of gold and silver miners, but primarily silver miners in this ETF. And then on this slide, I have the comparative performance of silver versus these silver miners and the S&P 500. So as I mentioned that you can see that they did pretty well last year too. Now the best performer is the iShares product, which is up about 80%, a little more than 80% over the past year. And silver and other silver mining ETFs are also up more than 62%, whereas the S&P 500 is up about 20% over the past year. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and I'll see you next week.